Alright guys, so here's what I decided to do. I got a bunch of stocks that people have wanted me to be researching. Of course, it's my epic homework file. So what I decided to do was I'm going to go ahead and make a private video so I can knock all this stuff out. And if there's any stocks that you've been having me look at, I can handle them in this video. And so I kind of want to do that with no interruption. And you know, this is for the subscribers. So I've had Tony and Medina. I've had several people ask for me to kind of research some stocks, take a look at that. Took a real long time. It took quite a while to kind of get an idea. A couple of these stocks I'm familiar with. A couple of these stocks, like I said, I'm gonna kind of move you in a different direction. But you know, it's all gonna take some. It all took me some time to kind of research and figure out kind of where I stand on each one of these companies. And so, without any further ado, let's just go ahead and get started. So, the one I had requested the most, or I had it requested 2 different times, was Match. Okay, and I believe we even talked about this in my last live stream. But I like Match. I'm calling it a buy. Like I said, I've fallen in love with the profit and operating margin. I love their return on equity. And then, like I mentioned, I believe I mentioned it in our last live chat, the $300 million of total cash and the $1.25 million of total debt. It's very, very manageable for your stereotypical internet company. And I love the service they offer, and I love how diversified they are, all the different companies they own. So I really like Match. I think it'd be a good long-term investment. You know, the only thing I really want to make you aware of, like I said, is that the short interest is kind of high. So they have a higher short percent of float and a higher short percent of shares outstanding. So just keep that in mind. I wouldn't go all in on your first position. I would probably buy some, you know, wait for a pullback and then buy some more. Or, you know, I would feel comfortable putting calls on Match. Okay. So let's move on to the second stock. Now, somebody asked me to check out ticker symbol NUGT, and it's NUGT, and this is a gold miners ETF. And this is an interesting, very interesting by the chart. Okay, a little too interesting for my taste. Whoa, what have I got going on here? Let me try this again. Let me just start over with this whole thing. Whoops. All right, so here is the 1-year chart on NUGT right here, NUGT. And so this stock is basically going to emulate the price of gold. Of course, gold is very low right now. I want you to have gold in your portfolio. Definitely, you know, definitely be buying gold while it's dipped down really low right here. But on a 5-year scale, and even if you want to go back further, if you want to go back 5 or 6 years, if you want to go like a max. So back in 2011, you know, this stock was $15,000 a share. Okay, and it's depreciated constantly. You know, even here in 2012, it was worth somewhere between $5,000 and $7,000. And now, like I said, it's depreciated to the point, it's just depreciated all the way down to $10, $11, $12. So that's bad. That's very bad. Probably one of the best shorts you could have ever played right there, you know, bought puts in. So I'm going to offer you an alternative, a stock I would rather you be involved in, and that is ticker symbol GDX. Okay, this is how I play the gold industry. This is how, you know, I've been picking up shares in the dip. This is actually a gold miners ETF, but it holds its value a lot better, and it's a whole lot better diversified with the companies they own, and I'm going to pull that up right now too. So let me get over here into tip ranks, and I'll show you what I'm talking about. This is all the different companies that you're going to get exposure to with this ETF. is the reason I really like it. So down here, guys, you're going to get exposure. Let me blow this up a little bit. You're going to get exposure to some really, really good gold companies. So New Mining Corporation, Barrick Gold, you know, down here towards, these are ones I'm more familiar with, like Randgold Resources Limited, that's ticker symbol GOLD, one of the best gold stocks on the market. Royal Gold. And so this is the one, this is how I play it, the gold industry. I don't want NUGT in my portfolio. I feel like the value is just going to continue to depreciate. I don't know if it's going to mirror the price of gold, or if the, you know, the value of the, you know, that particular ETF is going to just continue to depreciate. I don't have a lot of confidence in you know, what they're selling. So honestly, I would probably short NUGT, but I would definitely be picking up shares of GDX to get some gold in your portfolio. Okay? Moving on to the next one is Cardinal Health. I believe Tony Batu requested Cardinal Health. Now, I really like the looks of this company. Everything on first glance looked really good. I really like this as a dividend play. You're getting a 3.6% forward yield. You know, fundamentally, it's kind of flat. You're not getting a lot of return on assets and equity. You're not getting a whole lot of different operating margin, but the shorts are kind of low on it. You know, a lot of cash. I mean, I'm sorry, a lot of debt in comparison to cash. However, a lot of healthcare companies do tend to run this way. This is a stock right here I do not want to buy right now here, and I don't want to sell either. This is just a stock I would like to have on my watch list. Okay, it's just a stock I'd like to, you know, throw into my pharmaceutical and healthcare portfolio, kind of keep an eye on. I don't really want to take a position yet. Even on the chart, you know, there's nothing in this chart that would suggest like it's a screaming buy. Over the past 5 years, it hasn't really gained any value. As a matter of fact, it's fell off quite a bit. But you would be getting a good dividend yield buying into this stock. But here at these levels, you know, around the $54 range, like I said, just call me. I'm going to stand on the sidelines and kind of watch for now. Possibly a potential swing trade, but I think we can get in something a little better, you know. Now, the next stock, I got a lot of people asking me about this, was the New Beverage Corporation. The New Age Beverages Corporation. So this thing run hot as all get out last week. And guys, this is the exact same scenario pretty much all these marijuana stocks are. Okay? It's pretty much the same exact story. It's fundamentally terrible. It's run crazy. It's 130% gain in 52 weeks. You could definitely ride the momentum on this thing, but like I said, it's fundamentally garbage. You're at negative 22% profit margin, negative 21% operating margin. You're negative on assets. You're negative on equity. You've got a lot of shorts, you know, betting against this stock. This here is terrible. You have $213,000 of cash and $9.42 million of debt. You have negative operating cash flow. You have negative levered cash flow. There's really, really nothing positive at all fundamentally about this stock. This is one you could play for the momentum. This is one you could play for the price swings. Okay? I would not call this an investment. I would call this a very, very speculative trade. You know, this is the kind of stock I would want to trade, not own. Now, with, like I said, pretty much every time I talk about one of these marijuana stocks and anything that has any kind of association, I always I always try to leave my subscriber with the thought that this stock probably will run for a while. Okay, it probably will run into the speculation. If you want to try and capture some of that, and you feel like it's a good investment, best of luck to you. I'm not going to buy it, but I may possibly trade it. Okay. Now we want to move on to the next one. I believe Medina. Yes, Medina requested this one. AWSM, Cool Holdings. And I don't want to own this stock. I looked at it earlier. I really wasn't finding anything I liked about it. Fundamentally, I don't consider this an investment. there's really nothing positive to even really look at. It's the same kind of thing. 429,000 on your cash and 14 million on your debt. You got all these negative margins. You have, 24% of your shareholders are short on the float. We can go here, and it did move, 80% on the last trading day, which was Friday. Let me check and see here. So let's try to figure out what's going on here. So it looks like Apple investors are buying it. Let's see, the stock has run 150% from bottoming out for its 52-week low in August. Begun using the stock as a low price method for betting on Apple. Okay, so this is an Apple play. It's a little known retail holding company. It owns One Click International and One Click Argentina, which operate Apple products boutiques primarily in Latin America. So it's running on speculation. Some people consider it to be an Apple play. And again, if there's nothing, if there's no news really linking it to Apple and it's all speculative, you got to be aware of what you're buying into. So probably a great stock to trade, not a stock I want to own. Okay. Now let's move over here to the next one, and it was Stitch Fix Incorporated. I like the looks of this company. I really do. They've run really well over the past year. You get well over a 100% gain in a year's time. So it looks like it's closer to 200% in a year. So I really like the looks of this. Statistically, I think we're going to be up against some problems here. We're going to be up against, doesn't have the debt tallied up. They do have some operating cash and free levered cash. It's interesting, though, they don't have debt tallied up. I could probably dig further and find that. This is another stock I would like to have on my watch list, but not necessarily buy. Okay, maybe I'll buy it on a trade. I'll try to trade with it. Y'all are giving me a lot of ideas with this type of stuff. This, if there's a lot of volatility, again, even if we go over the past month, we can kind of see where the volatility is in this thing. So it's moved quite a bit over the past month, and you might be able to swing trade it into these dips. But just one I'll kind of have on my watch list. I know there's a lot of volatility, so we might be able to make a trade on it, sometime in the future. Now, FTNT. Let's see. Let's see here. This one didn't stand out to me for some reason. So I'm just going to break it down as we go. Let's see what we got on our charts here. So the chart is amazing looking. Looks great. You're getting a huge return, several hundred, well, little over 100% return in a year. Chart looks great. Let's see what we got on the statistical side of it. Yeah, the shorts, not too bad, 4 to 5%. No dividend. And operating cash flow, free cash flow looks pretty good. I would say this would probably be a very speculative buy. If you wanted to fit this in your portfolio one way, I would not have a problem with that. Just be careful. It's a $14 billion company, so that's good. It does have some market cap. It's holding its value pretty good. It almost kind of eerily reminds me of Square stock. That's a video I released this morning, how it's, some of the margins aren't quite there, and the shorts are a little high, but you can't really argue with an almost 200% return in a year's time. So I'm probably not going to buy, but it's something to definitely keep an eye on. And the last stock, let's see, was this, CarGurus, and this I like. This stock I like, and you might even have me talked into buying some, okay? So I'm really digging this chart. You know, it's taken a great gain, a lot of good gains over the past year, holding its levels real well. Seems like we're seeing a lot of resistance here in the 50s, and stocks keeping pretty well propped up on strong earnings, which is always a good thing, because if you've got earnings, you've got something. I really like this 34% return on equity. You know, the shorts on the float, pretty high. But this company does have about a $5.65 billion market cap. Everything I'm reading, everything I'm researching is that this company is very undervalued for the, you know, the market cap and the share price. And then, you know, this bothers me when you don't know a company's total debt. But 619% quarterly earnings growth is phenomenal. And the 44.7% quarterly revenue growth, I'm also pretty fond of that. And I might pick up a small position in CarGurus. Again, not typically the kind of stock I'm going to be fighting to find room in my portfolio for, but if you're interested in it and you want to buy it, I'm calling it a buy. And so that wraps up all the stocks that my subscribers have asked me to cover. So thank you guys, I appreciate it. I'm glad I could get this done for you, and I'll probably refer you back to this video in future live chats. So now all my homework is done, which feels great. Now I'm all caught up. I can throw this one away and start completely over. But thanks for watching, guys. Drop me a comment if you want to know more, you want me to research a little more into these stocks for you. And you know, let's just get this weekend over with and get Monday here so we can start trading again.